We welcome famed investor and strategist, Mr. Ed Yardeni, Dr. Ed Yardeni. Thank you for coming on.
My pleasure, Larry.
As always. Terrific stuff. I love reading your stuff.
Thank you.
I want everyone to know that. So, profits are the mother's milk of stocks. I've said it for years.
Absolutely.
You are writing prolifically about the importance of profits.
Absolutely. Well, I've been following your lead on that. You've certainly taken a very vocal position on that, and I just keep looking at the profits data, and it just keeps going on to new record highs, and that's got to mean something. And it's really pretty simple. Profitable companies expand, they hire, and they build more capacity. So that's what we want to root for.
And you're writing that this is a long-term bull cycle, that this is not a flash in the pan.
Right. Yeah, well, back in August of 2020, I started talking about the roaring 2020s. Mm-hmm. At that point, it looked admittedly pretty delusional. Mm. But, you know, if you were bullish in 1920, you looked pretty delusional, and it turned out to be an amazing decade. The similarities are basically on productivity. I think there's just, back then it was more about brawn productivity, you know, machines that can help us do things physically. Now we're sort of in brain productivity, and that's got to be bigger than anything we've done in the past. And I think it augments, it doesn't replace workers, it augments the productivity of workers. It makes them actually more valuable. And that's a great thing to happen right now because we really have a shortage of labor, particularly skilled labor.
Mm-hmm. So productivity is a hallmark of this cycle, okay,
correct,
so far. Profits and productivity, and correct, the two go together.
And they go together.
And we were talking in the first segment about unit labor costs, wages minus productivity. Right. These are for business economists, not necessarily ordinary people. But the unit labor costs are hardly rising. I was looking at your stuff.
Like 1.5%.
That's right. So isn't that in some sense a measure of the cost structure or the inflation going on in the economy?
It's the underlying inflation rate in the labor market. It's really that simple. And labor still accounts for a tremendous amount of activity and business activity in America. And unit labor costs coming down really just means that workers deserve higher real pay because they are more productive thanks to productivity. Productivity is like fairy dust. It makes real GDP better. It makes inflation lower. It boosts wages in real terms, and it boosts profit margins. The only downside is the myth that productivity kills jobs. It kills some jobs, but it takes a year or two for people kind of to figure out that maybe they've got to rethink what their careers are going to be. The thing that really excites me is business applications are absolutely soaring. I think a lot of people are kind of recognizing what's going on in the economy, and they're reinventing themselves. That's the amazing thing.
We're in a business boom, we're in a business investment boom, business capital goods
all of
boom,
the above.
All those things?
All of the above, and even the consumer. You know, Americans are amazing. You know, when we're happy, we spend money. When we're depressed, we spend more money, as long as we have access to it. And the reality is, people are still spending money. And I think one of the really unique things about the consumer right now is the baby boomers are retiring with $85 trillion of net worth. And as they retire, guess what? Disposable income is going to start scaring the pessimists because it's going to go flat because all these high-paid baby boomers are going on cruises. The savings rate's going to go negative, but that's going to keep consumer spending going, and the productivity will increase real wages per worker.
Which is so important. So, look, people say there's only 7 stocks that matter in the S&P 500, but you write about the other 493. I love that.
I call them the impressive 493. I mean, you know, they're kind of been like Rodney Dangerfield. You know, they get no respect, but they should. Those are the customers for the 7. I mean, the Magnificent 7 are creating all these technologies that are only useful if they're used by somebody that's paying for it. And so I'm not particularly concerned that all this spending on these technologies, AI technologies, aren't going to be profitable. I think they already are profitable because the cloud companies are making tons of money and the growth rate is in double digit.
Is there one last one? I have to ask this question. Is there a glitch in this scenario? I mean, I'm an unadulterated optimist. It's my nature. I think you too.
I think
What's the glitch?
Right now, my main concern, I think a lot of people's concerns, is geopolitics. I think that's what we're seeing in gold, and metals prices. I mean, the more geopolitical tension, the more it's likely that everybody's going to spend more on defense. And defense requires precious metals, basic metals, rare earth metals. So the geopolitics worries me. I mean, if Trump now has created a revival of the Monroe Doctrine with the Trump corollary, well, what's the Putin Doctrine? What's the Z Doctrine? And China seems like there's something going on there with the military getting purged. And so I kind of worry about the geopolitics. But historically, geopolitical crises have always created buying opportunities. And we may get one this weekend because we've got an armada right on the outskirts of Tehran.
Actually, the Armada is coming in our last segment on this show.
Oh, okay.
It's coming. You're anticipating.
I'm
once
anticipating
again.
it.
Dr. Ed Yardeni, terrific stuff.
Thank you, Larry.